G'day traders, and welcome to wrap up of the USA markets for the week from the 18th to the 22nd of November. So let me begin by just bringing up a daily chart quickly. Now, we don't normally get too many levels, as in support and resistance levels off the daily charts. We more look for them to provide an indication of how much movement we're going to get in the market. As far as providing some more support and resistance areas, we'll move to the 15-minute chart, which is what we use, and we'll bring that up next. But on the daily chart, what we're looking at here is basically this little section here. That's the week that's been, and you can see we're very much up near the highs of the market now. Those who've been following these wrap-ups for a while know that when you're grinding higher, all these areas where you're pushing higher, breaking a high here, breaking a high here, here's another high, breaking high, and we're looking at over months of data here. The market slows down when it breaks these highs. Okay, it takes away the fight between the buyers and sellers, and as a result, you get a narrow market, or a market moves with less width. As soon as the market pulls back from these high points, you can see these sections here, all of a sudden you get longer bars, more width within the markets. And sometimes it doesn't take much of a pullback to get more width, and you can see here pretty much the general area we are pushing higher, so naturally we're going to get smaller type of bars, and you can see that. But even just a small pullback, we've got a red candle here and another red candle here, then we've got a decent red candle here, so we're starting to come back a little bit. Also we get a bit more width. These two candles here are the furthest back from this high point. Even though it's only a little bit, they're our biggest candles, but all of a sudden we're coming back towards the highs, breaking new highs again, and all of a sudden the candles start to get smaller again. So keep that in mind as far as leading up to the day. Whether you're expecting a lot of movement or little movement, you can get that information and have a good idea, a systematic approach to it anyway, as to what kind of day we're going to get. Lots of movement or little movement, and that can really affect your trading. So let's get started with a little bit more about the support and resistance areas within the market. So for this, before we get into the 1-minute charts which we trade, I'm bringing up the 15-minute chart here. So this is where we, again, identify longer term patterns and trends and support and resistance areas within the market. So we're not using a daily chart, we're looking at a 15-minute chart. So this means every one of these candles represents 15 minutes in the market. Okay. And what you can see is 2, 3, 4, 5, 6, about 7 days. So we can certainly see the last week and plus a couple more days. So we're looking at a lot more information. We can see what's happening. It's short term enough to be able to see the ebbs and flows of the market, but it's also long term enough to get that longer term perspective to understand what the market's doing. Sometimes when we look at just a 1-minute chart, we can very much be just sort of zoned in on what's happening there and then, whereas what really needs to happen is look at the bigger picture, what's happening over the last few days or even the last few weeks. So these blue areas, blue lines marking the major support and resistance areas. Some of these go back weeks previously, but we continue to bring these lines across. What happens as we bring these lines across, we won't be just adding in lines left, right and center. All of a sudden we're going to get this schmozzle of lines, which is what we don't want. We want major support and resistance areas. Every 3, 4, 5 points a line or more. We don't want to have a line every 2 or 3 points. That's going to be confusing. So we bring these lines across, and as the market reacts to them, they might need slight adjustments here and there. But most of the time, while we're in this general area, we'll leave them. But then if the market goes away and then comes back to them, it might need a slight adjustment then. And what we do is we'll draw these major support and resistance lines on our 1-minute chart so we know they're there. Okay, so we're certainly not changing them during the trading day. We don't want to make it confusing and be looking to change it during the day. We've got these lines already preset, and as we start each trading day, we mark them on our actual trading charts. So aware of these major support and resistance areas helps us understand, while looking at shorter term markets, what's happening on a longer term perspective. So let's get into the 1-minute charts now. So you can see here's one of those blue lines that I was talking about. Just marked it on, so we know, on a longer term chart, 15-minute chart, this is a major area within the market. We've got to be careful of those sort of areas. If we're looking to push through it, you're best off waiting until the market gets through it. Okay, if all of a sudden you're looking to sell around about this area here, and it's likely a chance where it could get a bounce, well that's not going with the probabilities. Wait till it breaks through. So what you'll find as we move through the week, 88.50, which is this blue line here, which we didn't really get to today. Late in the afternoon they came down towards it, but throughout the week it's become a significant area, and you'll see, keep an eye on 88.50 as we move through the week. it's certainly a price within the market that the markets are really reacting to, and showing a lot of attention towards. So here we go. We start off today. We've got this purple box. So this is what we call the pre-market box, or the power box. What we're doing is identifying significant high point and significant low point between the hours of 8 a.m. pre-market up till 10 o'clock, which is like the unofficial opening of the market. Okay, so basically we're looking at these significant edges, and we put a box around that. So this box goes throughout the whole day, but sometimes we'll just box the immediate area just so we can see where it is, but we want to be aware of it throughout the entire day. And it's significant. Sometimes market breaks through it, sometimes market bounces off it. What we really do look towards is the other markets, which is these markets on the left hand side here. It gives us an indication, is the market looking to break through and you want to see the other markets breaking, or if they're looking to hold, you want to see the other markets holding off these powerful edges that we're talking about here. So as far as in the trading room, our live trading room, we'll look for trades around these areas, but it's also an area or a way to segment the market. We're constantly aware of this box and seeing how the market's reacting to these boxes. And what will happen is often you'll see, like this, it's formed a high point, formed a low point. So we've got our significant edges, and all of a sudden the market comes up, pulls back, and you can see it's formed two little points here. Once it breaks through that, it's got a good chance of breaking through that and going up and looking at this upper edge. So it's like we're working between these two boundaries. We've got two sections or 2 points that are very interesting to the market. They'll quite often go and sort out these edges and look to either break through it or revert back in range. So you can use it in a whole host of fashion, or a whole heap of different ways. But most importantly, what we're doing is we're segmenting the market. We're doing it with a systematic process, and it's a great way to keep an eye on what's happening in regards to price action. It's telling us what the market wants to do. And as you can imagine, each day when we're boxing these areas, and you'll see as we move through the week, sometimes we've got a really narrow box, 4 or 5 points, and then other times it's a lot wider with 10, 12 plus points. So that's what I mean by it tells us what to do around price action. We've got a systematic approach, but at the end of the day, we're waiting for these two significant points. If price action wants to make those points wider, then we'll go with that. If it wants to make it narrower, we'll go with that too. But price action is telling us ultimately what this market's trying to do. So see this particular day, if I sort of scroll through the day, not until late, very, very late in the afternoon, we eventually got to the edge and then broke outside of it. And if I show you the other markets, you would have seen that they're also breaking. So there it is there. As the Russell's breaking, it's about there. So as we're hitting this power point here, the other market's already down and broken through the edge. So it gives it quite a high probability that it's going to break through and get a burst out to the outer side. However, looking at this late in the afternoon, it's not such a bad area. What we want to do is look at it back in the morning session when it's most powerful. Okay, so within this particular day, being a Monday, being that we've got slower markets from looking at those daily charts, you can see we just really kept within this range and never really came and tested the edges. A day where not a lot happened. And you can also see what I mean by the market. So when this market starts pushing up here, coming to the upper edge, it came towards that area and then just really reverted back within the range. You can see the other markets not looking to break higher. None of them are broken up through their points. You're not seeing these markets spike up through this area, showing that there's buyers around. So that really tells us that there's not a lot going on. It's just really looking to stay within the range. Okay, again, you can use this box for reversion trades, to bounce off the edge. You can look for continuations, like it did late in the afternoon where it breaks through, or you can look for trades within the power box within the range. For example, power fading or looking to break these areas and push towards the edge of the box. So let's move on and have a look at Tuesday. So here we are, and you can see the power box today a lot wider. We've got a significant low point down here, significant high point up here. Now you can see it's a bit past 10 o'clock. What happens as we're approaching 10 o'clock, which is here, we're right at the highs. So we don't just box that because the market's right there. We wanted to create a significant edge within the market. So it comes up here, pulls back a bit here, but we're very systematic. We're very rules based. We need it to pull back exactly 3 points. That's the rule, and we stick to it. If it's 2 or 2.5 points, it's not enough. In this case, it's 2 3/4 points. Still not enough. We're very systematic. We wait. Then it creates this edge here, pulls back by 3 points or more in this particular case. So now we've got our box. This time it's taken a little bit past 10 o'clock, but that's fine. Sometimes it happens, and we've got this significant area within the markets to look at. Now you can see these major support and resistance areas also marked in here. So we've got 88.50, so this is this major one that the market deals around throughout the morning. We've also got this lower edge, which becomes significant as we move through the market. So as we look through the markets, you can see the market's coming down here and looking to break through this edge. So as we're looking to break through here, let me bring across, sort of slide the other markets. The other markets are also breaking. So as we're coming down here, the other markets are breaking. Okay, so it's one of those ones where we could potentially look for it to push through. But there's a couple of things going on here that as to why we wouldn't look to take this. For one, it's very late in the afternoon. Looking for breakouts late in the afternoon is not ideal because afternoon sessions, late in the day, typically stay range bound. So we don't want to be looking for breakouts then. We want to go up the numbers. You probably want to look for it in the morning when it's most powerful. And the other thing holding this up, as you can see, major support and resistance. And this is why we want to understand longer term perspectives within markets. We've got an area here where it looks to be breaking, but other markets breaking. We're saying, okay, this has got a chance. But the fact is, we know there's a support area from those 15-minute charts down here that's potentially going to hold the market up. And that's exactly what it's done within this particular case and jumped up from there. So therefore, it's an area to look to avoid. And you can see then it's come up and very closely come to that 88.50, that major area within the market, and pushed off it and then finished the day. Okay, so moving along now, we've got Wednesday. Again, we've got major support resistance areas marked, and you can see there's 88.50 and that 81.50. These are two areas that the market really tested quite a bit throughout this week. It's sort of the zone it's stuck within. You can see 88.50, the market really hanging around. It jumped around it a bit here, and then pushed through it here, this section here, but then throughout the or late morning and afternoon, it's really held this particular area, and really seen it as a significant area. Then it's pushed through it, uses resistance from then to push lower from. But as far as price action goes, this ES or this particular market we're trading here eventually got up and spiked outside the power box. Okay, if you look across the other markets, you can see them also getting that spike. And sometimes these spikes are really hard to interpret whether they're going to get some sort of continuation from. They can be great continuations, but at the same time they can also be ones where you get a quick breakout like this and a quick reversion back within the range, which has obviously happened here. So it's sometimes a little bit more of a difficult one to judge. Again, you look towards the other markets to really give an indication of what's happening. If we look to the other markets leading up to it, what they were doing is really trying to push down lower. Then as this other market's getting a spike, eventually they followed and came through. But they're certainly, as we're watching this live in real time in the trading room, there was a lot of influence, a lot of power on the downside when we're looking at the other markets. So all of a sudden, we got this bit of a spike up, almost from nowhere, so to speak. So in this particular case, it's a difficult one to really expect a continuation from. But as far as trading goes, we try to keep it systematic. And if the other markets are breaking out, then we look for a continuation of the break. But it's one just to be careful of when leading up to it, we saw some pressure from the other markets on the downside. Moving on, you can see, as I said, it's just really come back from the range, just hung off this support and resistance area. To eventually we got this really quite crazy price action in the afternoon. We had a major news announcement within the market at 2 o'clock, and you can see the markets reacted correspondingly. And when you get this crazy price action, we're certainly not looking to trade. You can see massive candles now jumping all over the place. Really just sort of untradeable sort of price action. So moving on now to Thursday. Again, we've got this larger power box. So you can see the upper edge here. We've got to 10 o'clock. We've pulled back by 3 points or more. This is case exactly 3 points. So that's what we're looking for. As far as the low edge, this is one of those ones a little bit more tricky. What's happened is it's at 8 o'clock. This is where we start, or we look for the power box to start from. You can see it's at lows. Okay, it's within 3 points of the low. So what we do is we keep going back till it forms a significant point. A significant point is, remember, pulls back 3 points. So we've got 1, 2, 3's up here. So it hasn't formed that significant low point yet. Here it does here. Here's that significant point. We're just looking for major edges within the market. So rarely will you see it have to go all the way back to this one here, but occasionally this is what's happened. That's why we've marked it. So the actual pre-market box should be down here, but we've never come and tested that, so it doesn't really pay any sort of more attention as far as price action or trading for the session or for the day. So we've come up, created this edge here, pull back from here. The markets, try to break outside of it. Okay, you can see, look across the left hand side here, top left market, this Russell here, very much powerful, a lot of price action, very strong on the upside. As for the Nasdaq, this bottom left on here, it's pushing up, but certainly not as strong. I'd call it a neutral sort of market, but eventually this has spiked out, and we've got the continuation through. So how we normally look to trade is look for a spike out, breakout like this, whether it be a couple of ticks or a heap of points, however the break is, and then look for a pullback candle. So in this particular case, it'd be a red candle close, which is around here, and then look for the continuation. So it's popped back a bit, but then eventually push through and gone on to get outside of this pre-market box. And then from there, you can see price action is really slow. So what's happening here is that the market's trying to push higher, and as a result, price action or the width is starting to slow down. Remember, we're near those highs on the daily markets, but what it's doing is it's hanging around right now around this 88.50 region, so major support and resistance. So again, you can see this is where it's broken from, then it's come back and tested it to the tick, really showing that this area is strong within this market, and from there it's just slowly grinded higher throughout the afternoon. We've got the last day of the week, Friday. So Friday, you can see very tight pre-market box, power box area. We've got the significant low here, significant high point back here. So at 10 o'clock, we're around here. So we pull back 3 points, and all of a sudden we're trying to break up through here. It's really just dealt sideways around this power box. There's no momentum outside, but eventually it does get there and it gets a bit of a continuation. But what I'd say about this area, leading up to it, we're very clued up on it being a tight range. Remember that daily chart, at this stage we're coming back and making a new high, which says to us potential for very slow movement and tight width within the markets. Couple that with the fact that the market opened up very slowly, and we've got this very tight pre-market or power box of 4 or 5 points, says to us that it's not the best day for looking for trading setups. We've got a very tight day. What we want is a little bit more movement, and you can see pretty slow price action. We had this little bit of a push up here, but throughout the day fairly tight, to where we finished off the week. So that's a wrap up for the 18th to 22nd of November. Just to finish off, here's the 15-minute chart again. It's worth looking at where we're at, and you can see very much as we start this new week coming up, you can see we're right at all-time highs again. Looking to break high. We're actually gone past 1800, which is a significant level of the market in itself, because it's a round number, it's a 100 number, and it's the first time the market's ever been sit there. So we're breaking that point now. So we can, at this stage, just expect slower markets until we get some sort of pullback, like we say. So good luck trading, and we'll speak very soon.